Brought to you by Penguin.
The Revolution That Wasn't, by Spencer Jakab. Read for you by Sean Patrick Hopkins. To my 3 apes, Jonah, Elliot, and Danny. Introduction. I'll never forget the day I found out that my sons were degenerates. With my newsroom shut by COVID-19, I was working from home the morning of January 25th, 2021, when I stopped editing a column for the next day's Wall Street Journal mid-sentence to see what they had been up to on the internet. After less than 10 minutes of scrolling, I began to draft an email. It wasn't to their mom or their principal or even a child psychologist. It was to the publisher of the book you're listening to now. My oldest boy, a college senior, and my youngest, a high school freshman, were members of a subreddit called wallstreetbets, whose members call one another degenerates, apes, and some even less flattering names. I had been aware of social networking site Reddit's freewheeling stock market forum for about a year at that point, an irreverent alternative to its older, more buttoned-down investing board. In the months before the pandemic, with the market booming, every week or so some random stock would jump on heavy volume because its members had started to buy it en masse. As far as I was concerned, it was an amped-up version of the infamous Yahoo stock message boards of the late 1990s. I would soon learn that I had woefully underestimated modern social media and the power of the latest smartphone-based, commission-free trading apps. When the economy ground to a halt and stocks plunged as the world grasped the severity of the pandemic, older, grayer investors once again failed to follow their own advice about buying when others were panicking. Not the degenerates, though. Maybe because they didn't know any better. The amateurs plunged in, and soon they were running circles around investing legends like Warren Buffett. But they were doing dumb things, too, like buying the shares of bankrupt companies or snapping up stocks with names that sounded like ones mentioned on Twitter by Elon Musk, but that actually were worthless shells. Traders and fund managers thought it was hilarious. From what I saw and heard that morning, though, Wall Street wouldn't be laughing anymore. My oldest son had prompted my deep dive into the subreddit by asking whether I was writing something about GameStop. The reason was that a friend of his, a bright boy I had known since they were both in kindergarten, had bought shares in the video game retailer after reading about it on wallstreetbets and had nearly doubled his money in a couple of days. When I said he should count himself lucky and sell, and he said he absolutely wouldn't, I was intrigued and began to read the forum. With 3 sons, I was all too familiar with GameStop. I had driven them there countless times as they bought discs and then later traded them in for different ones. From editing columns about the chain over the years, and from my son's recent preference for bypassing the store and buying digital games online, I knew it was a dying business, sort of like Blockbuster Video after Netflix really started to take off. This was so obvious that it seemed like every hedge fund manager on Wall Street had piled into a bet that its share price was eventually headed to zero. But the pros suddenly found themselves facing a group that wasn't interested in cash flows or when the next Xbox was coming out. If a stock went up for a week or a day or even a few hours and they sold it in time, the degenerates were happy. Over the past year or so, they had noticed that some stocks rose simply because they and a lot of strangers they had met on Reddit bought them. There was power in numbers. Now they were playing a new and dangerous game, ruining the lives of hedge fund bosses. There were more than 2 million members of Wall Street Bets by that day, and the group's membership would quadruple within a couple of weeks as they shocked the financial establishment. Some users had grasped that investment funds were exposed to unlimited losses because they had engaged in a technique called short selling, which allowed them to profit if stock prices fell, the opposite of what most investors do. The fund's bet against GameStop was so popular that it had left them with a very narrow escape hatch if the price started to rise sharply for some reason. With brokers like Robinhood allowing...
Sample complete. Ready to continue?